It's 6 o'clock in London, it's 1 p.m. in New York, 1 a.m. in Hong Kong, 3 a.m. in Sydney, 10 a.m. in San Francisco, and 10:30 at night in Mumbai. Greetings, good morning, good afternoon, and good evening, depending on where in the world you are today. My name is Patrick L. Young, the IPO-VID live stream, Series 11, Episode 6 in the aggregate. That's show episode 66 starts here. Well, very interesting deal this week. The London Stock Exchange Group, they're moving more towards low latency with all of their data purchases. Andre Remonstone's division has acquired May Street, adding a bit of high frequency trading mojo to their data business. Congratulations to an alumni of IPO-VID, the Honourable Chris Giancarlo Freeman of the City of London, and also, of course, former chairman of the Commodity Futures Trading Commission, nowadays better known as the Crypto Dad. Congratulations, he has become the latest Chevalier. He's a Chevalier de la Légion d'Honneur in France, following in the footsteps of, nonetheless, the incredible Professor Dr. Richard Sander in the parish, and of course, the inimitable Xavier Rollet, amongst others. Finally, this week, for the introduction, let's talk about a different kind of yield curve based on the Intercontinental Exchange. We've just published this on LinkedIn and Medium today. It's the ICE cost of borrowing. And if you look at the chart, it makes for graphic reading. This, ladies and gentlemen, is the deconstruction of quantitative easing writ large. Only 2 years ago, during the course of all of those lockdowns and the COVID thingy, if you remember what that was, of course, interest rates were very much masked. 0.7% you could borrow 3-year money at. Look at the lurch. We're now talking about 3.65% money being borrowed, and much more, as you can see from those series of yield curves, the yellow and the red representing respectively. The yellow, the orange is in 2022 in May. The shade for me that's light green, but apparently producers say they think that might be a bit yellowish. That's where we are now in 2022. Quite a graphic thing. Pick up the article on LinkedIn and Medium. It'll also be discussed in tomorrow's Exchange Invest daily newsletter. Today, ladies and gentlemen, pick up the article. We're going to be discussing delivering SaaS, software as a service, through TT. By TT, I don't, of course, mean my petrol-headed obsession for the things like the Tourist Trophy, one of the finest motorsporting events that ever graced the British Isles, but rather, of course, trading technologies, because software as a service is integral to our guest today, Keith Todd's DNA. Roughly half of his 40-year career has focused on SaaS, spanning global technology businesses from publicly listed and large multinational companies to startups. As the CEO of TT Trading Technologies, Keith oversees day-to-day operations, driving the firm's global growth strategy and execution. Prior to TT, Keith served as CEO and remains executive chairman of his most recent startup, KRM22. He was executive chairman previously and CEO of FFastFill, a global derivatives SaaS provider acquired by Ion Group, as well as executive chairman of Ion Agency Trading. CEO of FFastFill, a global derivatives. And we're getting double value for money today, as I do believe I'm somewhat audible, perhaps through our guest speakers at the moment. Keith's career also includes leadership positions with Marconi Defence Group and ICL PLC, amongst others. He was also chairman of the UK Broadband Stakeholder Group. Keith was awarded the CBE. If you don't understand the wonders of British awards, that's a very high honour indeed, bestowed by the Queen of England, Commander of the Order of the British Empire, and he was given that for his services to the telecommunications industry. He is a fellow of the Chartered Institute of Management Accountants. And Keith, today we're talking about the wonderful world of delivering SaaS through TT. Greetings, welcome to the show. Where in the world are you today, Keith?
Good evening, Patrick. Great to be with you. Today, London, just outside Bank, central London, up in the city, as many of the listeners will be hearing. But thank you for the accolades, and much appreciated. But yeah, very grounded in the wonderful world of capital markets technology now.
Indeed, very much grounded in the world of capital markets technology. Keith, you're in the heart of the City of London today and bank, but is that actually your base now that you've become CEO of TT?
Well, TT's headquarters is Chicago, the home of the derivatives, exchange-traded derivatives marketplace. I now have an apartment in Chicago, and I'm spending a lot of time there. I'm actually heading back to New York tomorrow morning. Over time, my time will be split between where the customers are. Broadly speaking, 50% of trading technologies customers are North America, and the other 50% are in Asia and Europe. So plenty of travel coming my way.
Plenty of travel coming your way. Let me say hello over the ether sphere as we're being watched live around the world this evening, delivering SaaS through TT with our guest this evening, Keith Todd. Hello, Simon Huckle. Good evening, everyone. Hope you're well and surviving current market conditions. Amen to that, Simon. I hope you're well. You've already had, well, quite the supply side struggle with the inflation because of, well, container crises and all of those issues to do with the supply side to your business already this year. Hope you're doing okay. It's lovely to hear from you this evening. Thank you very much for tuning in. And of course, your questions will be welcome to Keith anytime during the show. Hello as well to Ian Miller. Good evening, all. Looking forward to this evening's show. We're delighted to have you with us this evening, Ian. Thank you very, very much. If you'd like to ask Keith a question anywhere in the domain of, indeed, the wide world of TT, trading technologies, empire, exchange traded derivatives, and how they impact upon the vendor, which is TT, and indeed, of course, the SaaS business, you'll be very welcome to ask a question. Don't forget to give us a like in the comments as well, please, because it helps us on whatever platform you're watching us this evening live, whether that's Facebook, LinkedIn, or YouTube. So, Keith, very interesting altogether. I mean, this acquisition, quite an upheaval, if I may say so, in your life over the course of the last year. How did that come about?
Well, in one level, it was relatively straightforward. As you may know, but the wider listeners won't know, I spent the last 20 years in financial services, the capital markets, particularly the derivatives marketplace, and prior to that, defense and big IT companies. But I know all the constituent players, the customers, the people, the competitors. And when it became clear in the last couple of years that trading technologies was going to be sold, it wasn't probably overall surprising that one or two people approached me to see whether I was prepared to work with them. As it turned out, very pleased that I worked with the Seven Ridge Group, private equity fund, and we were very successful in a highly competitive process to actually acquire the rights and, frankly, the honor of taking trading technologies forward for its next stage in its life.
Acquired it. You've got a couple of other people, including obviously the Seven Ridge Fund itself, I do believe is backing from, amongst others. SIBO is one of the exchanges. Were there others as well that backed the fund?
Well, there's a number of limited partners. And for the listeners, I don't want to be too patronizing, but let me just explain the structure of the fund. The fund manager, the general partner, is Seven Ridge. And Seven Ridge was founded by Karsten and Veronica. Bringing in investors, what are known as limited partners, you bring a range of partners to support a particular fund activity. This particular fund was focused on acquiring and then expanding trading technologies. And yes, as you say, two of the limited partners decided they would make their names public, which was SGX and CBOE. But I want to stress those are only two of a number of limited partners within the fund. They have no involvement in running the company day to day, but they are obviously very interested in how we're doing, and have no board representation. So myself as CEO, run the company day to day, and I'm very well advised by an excellent board that Seven Ridge have assembled.
Interesting indeed. You touch upon there Carsten Kangater. He used to be the CEO of Deutsche Börse Group at one point in time, and Veronica Augustsson, his partner in crime, who was, of course, the CEO of Cinnober, the highly successful vendor to many exchanges around the world over a course of a number of years. And I do believe also, if I'm correct, Cinnober was actually an early investor in, I think, both of your previous investors. Weren't they an investor in both FastFill and KRM22?
Very good research. I've had, and with the companies that I've worked with, FastFill and more recently KRM22, a long relationship with the Swedish company Cinnober, of which Veronica was CEO at one time, previously head of sales there, and had a deep relationship with her, but also with Niels Robert, who had founded Cinnober. Really great company, and as your listeners will probably know, in the end they became part of NASDAQ. So yes, long historic relation. Less of time with Carsten, only probably over the last 4 or 5 years that I've known Carsten, but two very astute business people who have created Severn Ridge to invest in technologies which will make a significant difference. Growth technologies, not turnarounds, not just turn around and flip the asset, but how to invest in teams and platforms that can be expanded and provide significant growth. And I'm sure we'll tonight get it onto the question of where does TT go in the future, but let me leave it there for the moment.
Yes, because I want to go backwards to go forwards, first of all, because obviously KRM22, that's, if I remember correctly, listed on the AIM market in the London Stock Exchange. Right. You correct me if I'm wrong. And that was your baby that you created, what, 5-6 years ago, something like that?
Actually, only 4 years ago. It was probably floating through my mind. And it's probably worth sharing the origins of that. And I'm sure certainly many of the listeners will relate to this. What I've witnessed over the last 20 years in this industry is the sheer cost and complexity that the institutions, tier 1s, tier 2s, tier 3s, buy side, sell side, have to deal with. A lot of that complexity is from legacy that's been brought forward and not replaced, and the complexity on the supply side of firms selling, if I metaphorically may say, the bricks or the cement or the wood to build a house, but not a house. So KRM22 was founded with a simple premise that the integration of the risk tools across a firm should be available to customers, and that the data that one consumes to manage risk gets ingested once and exposed on pre-trade risk, at trade risk, post-trade risk, surveillance, compliance tools, for example. So the premise was there to help address a fundamental problem. And I was lucky enough to form the company with a number of very, very insightful, competent people that really understand this marketplace. And the company is now flourishing. It's, as you well know, TT has taken a 25% investment, and TT has also become a distributor of the KRM22 technologies.
So very interesting altogether. Let me just say quickly here, hello, Marcus Ward. Good evening, all. Lovely and sunny this evening. Yes, indeed. I do believe you've pulled the blinds in London this evening so that you're not actually managing to have a halo effect behind you rather than just a technological halo effect during the course of this evening's discussion. Good to see you, Marcus. I'm going to come to James Davis's question in a moment. I don't want to have that right now because I think that's going to be slightly further down the line. So you left KRM22. That intersects very interestingly between the two entities, and obviously Trading Technologies has taken over. Perhaps you can give me a quick background for those who don't know it. What does TT do?
Well, first of all, marginal correction. I don't feel I've left it. I've certainly changed my role to Executive Chairman of KRM22, but very definitely, part of the fabric of the industry and myself. What does Trading Technologies do? It is a company that has provided trade execution services. So connectivity to venues, nearly 60 venues around the world in all continents. It provides the tools to enable traders to trade successfully from screens, and extensive API and fixed connectivity to take flow in from various sources, algorithmic trading, as well as, frankly, from other platforms. So it's a trade execution service, and it's all SaaS based. I'm sure we're going to get into that in a moment. And we've been initially expanding some of its capability, particularly the one that we've announced in March around algos, where we acquired RCMX algo engine, which is being now integrated into the inside our firewall, and for a very intimate connection in our co-location facilities in all the major exchanges in the world. So a great enhancement, but trade execution services.
Interesting. So trade execution services, I mean, the history of TT really dates back to the very origins of electronic derivatives trading, doesn't it? At the start of this century, as it were.
It's going way back, without doubt, into that period of the late 90s, when probably around 2000, 2001, a number of so-called ISVs came into the market. As markets moved from the very dynamic PITS, face-to-face trading, and it was a natural progression of how trading would move, over time. So it's been an early practitioner of the delivery of trade execution services, but dramatically now a very significant delivery model. In the old days, it was software deployed on site in customers, each customer separately. Today, we are a SaaS platform operating globally across the full trading cycle, and covering all those global marketplaces. So yes, a deep history, and one that we are still proud of. I mentioned earlier that we were actually privileged to be able to take hold and take forward the mantle of trading technologies. Harris, who was one of the key backers of the development of trading technologies over the last 20 years, did a great job helping the company through very challenging times in the marketplace, and has now handed over the baton to Seven Ridge and myself to lead the company. When I saw Harris earlier this year, I don't think he'd mind me saying this, he's in a happy place. I think he feels, and I'm sure you could ask him, Patrick, it was a good home for trading technologies where we can build on that important history, that important legacy.
Interesting. Yes, of course, Harris Brumfield, originally amongst the founders of Trading Technologies and the man who drove it forward. And of course, that was where you came into our story, the parish story, as it were, the world of exchanges, because you joined the ISV FFastFill.
I did indeed. It was a very interesting period. I had a passion and belief a long time ago in the late 90s, and in 2002, I took my ideas into the city to say software should be delivered as a service. I have to admit, it was called application services in those days. It wasn't cloud, it wasn't SaaS, but intrinsically it is what we now know as SaaS and cloud-based services. Because it always seemed crazy to me that the old history of where you sold a server, a mainframe, a network, and you then employed people to assemble in the company, it was just the wrong model. The right model was, almost using a TV metaphor, you want to switch the TV on, change channels quickly, change functions you use to trade. If you want to add a new function, you switch it on. So, it was early doors. So FFastFill was very, very clear in my mind. 26th of September 2002, I entered the door. We had a platform which was not hosted, and we transitioned that company into a SaaS business over the next decade, launching it in 2005.
Very interesting. So Thinking about this, the whole SaaS thing. Oh, let me just say at this point in time, good evening, Ron Carmichael. Good to see you, Keith, and Patrick, of course. Great to see you too, Ron. Lovely altogether. I hope all is well in your world, Ron. Very interesting when you're talking about that whole basis of SaaS. A lot of people might look at it and say, but isn't there a problem because delivering SaaS ultimately slows down your execution onto exchanges?
Not true at all. There is no doubt that one needs to be cognizant of the different styles of trading. And for example, somebody like taking positions on a strategy, a multi-leg strategy, time sensitivity is less relevant. For those people who are very keen on fast algo execution, we have the capability to deliver algos co-located with the exchange matching engines as close as one can to get very fast execution. And I think whilst everybody says mine is faster than others, ask the customers base out there. The general chatter in the world is TT's execution platform is very quick and very effective.
Fascinating altogether. And you were saying that you are connected to, I do believe you said earlier, 60 exchanges around the world?
Approximately 60 exchanges. It always question how you add them up, what you include in those. But very large, all the major exchanges, including B3 in Brazil, out in Asia, Hong Kong, Singapore, all the European American derivatives exchanges. So very extensive coverage and broad. We will be broadening. This again may come up later on. We'll be very much broadening our connectivity beyond the exchange traded derivatives world in the coming months and years ahead.
So your platform at the moment is based, TT have traditionally been focused very strongly in the exchange traded derivatives world. You don't tend to max out on connecting to things like cash equity exchanges or bond markets? No,
that's a very accurate statement. And the way we think about this is that we would encourage people to think about different trader groups. So if you've got a commodity trader, obviously trading in the derivatives marketplace, gets access to all the relevant commodity exchanges. They may also have a requirement for example, FX hedging. And today that's something that we do independent of TT, but that's one of the natural sort of steps for TT to make, to be able to bring back, bring into the platform the capability to be able to, for example, auto hedge commodity positions in one's home currency. Another area which is well known to the listeners here, basis trading between cash, fixed income markets and futures market. We have some capability there, but we're currently looking at extending that. I'm slightly nervous about mentioning the word crypto. It's a big topic in its own right, but there's no doubt that the convergence of the crypto venues with Main Street capital markets is starting to happen. And as a result of which we need to be responsive, reactive to be able to allow people who are our traditional base to trade those marketplaces.
But in fact, on that note, if I can just say, I'm going to throw in that question, which comes from James Davis, because he's been waiting patiently for the last 20 minutes. So it would be great to hear if there are plans to take TT in any new directions, particularly into crypto and DeFi.
Well, I'm going to focus primarily at this stage around things which I've talked about publicly before. And that is crypto. And there is no doubt, as I was just saying, that I don't remember whether James was at Boca this year. You were, Patrick, where we had a good catch up. It was quite clear that the convergence of the traditional exchange traded derivatives community with crypto was happening, very visible to everybody that was there. So we will be very shortly announcing plans and things which we have done to move TT towards the epicenter of crypto connectivity. Now, I'm making no judgment. I don't think that's my role on which crypto coin, which crypto venue is going to win or lose. Our role, I believe, as a trade execution service platform is to provide the connectivity, the tools and functions that the traders who want to trade those markets can trade. So you can expect very soon to be hearing some more announcements around crypto from Trading Technologies. What will follow after that is some work we've been doing in preparing our thinking around the topic I also just touched on, which is FX. It's one of the natural additions to our current marketplace. What I was about to say before James asked his question was the other area when we talk multi-asset is the core mainstream fixed income, core mainstream equities or securities as people call it, or FX. And those requirements are for people trading primarily those core cash products in the core markets. The requirements there are quite different from the requirements of a trader that would be traditionally in the exchange traded derivatives marketplace.
Very good. Thank you very much for your question, James. Very interesting altogether. Let me just say that I think in answer to this question, Ian Miller, is this trading platform something that VLRM, of which I'm an executive director, and the recently acquired GSX, Gibraltar Stock Exchange, pending approval from the Gibraltar Financial Services Commission, of course, would be using? I'm sorry, Ian, material non-public information has to apply there. We're awaiting the permission going through, as you mentioned, approval pending. I'm afraid that question, I think for this evening, is what one might term a bridge too far, okay? So we're not going to address it this evening. I'm not going to ask it to Keith, but I want to say thank you very much. Keep the questions coming as we're talking about SaaS and the TT platform itself with Keith Todd this evening, CBE, a veteran of this marketplace overall. So Keith, you mentioned these areas that you're looking at getting into. What are the actual structural difficulties with moving, for example, into any of the above, whether it's crypto or whether it's foreign exchange or bond trading?
Well, interestingly enough, there's at the heart of this, there's always in these types of situation a question of the classic make or buy. Do we, and when I come to buy, I'll expand that. Do we build the functionality out ourselves, put the resources down? Obviously, that takes time. The technology competence in many of these areas we already have, and we can expand the base of our technology group. A really great core of technology teams across the world. The subject matter expertise is a bigger challenge. And that's very specialized for each of the marketplaces we just talked about, FX, fixed income, for example. And even if I separate out buy side, sell side, there's a different sort of understanding of subject matter expertise that is required. So we make assessments around whether we're going to build it ourselves, whether we're going to partner to give us quicker, earlier access to particular technologies. That's a very legitimate business principle. And I don't mean, excuse me saying this, but everybody says we're partnering with everybody. I'm talking about proper partnerships, intimate partnerships where people are working together and the technology is intimately connected with it, or the acquisition route. And we've been very, very public. I referred to it actually, 20 minutes ago. The fund and the backers of Trading Technologies set out not just to buy the company and make it more profitable, but to grow it. It was a growth strategy. And you might want to ask me, but I'm going to assume you are asking me, why? Why the growth strategy? Well, as we look out in the marketplace, and let me stay in the home market for the moment, I would say the marketplace has never been stronger. One, interest rates are starting to rise. Two, unfortunately, for an unfortunate reason, volatility is very high. So the health of the marketplace is very, very strong. Secondly, and I think you've known me for a good part of 20 years, Patrick. If I see an opportunity, I want to move in and take it. And I frankly don't see enough energy elsewhere taking these opportunity to go back to something I said, reduce the cost and complexity of the way trade execution is done. Give customers optionality, so that they can have features and functions they want to use.
It's fascinating, actually, what you're talking about, because you started, as you said, with reducing complexity, reducing the cost base for the institutions, etc., that are coming to market. And then, of course, instantly here we get to 25 minutes into the conversation, and you're saying, absolutely agree with you, by the way. Gosh, the difficulty is, of course, when you want to move into these new subject areas, you need to have subject matter experts, because hashtag it's complicated to get into these new markets. And therefore, obviously, that simplification business starts to become quite difficult overall because of the pre-existing ladders, levels, all sorts of technology stacks that are there. But also, of course, there's the inherent issue that you're trying, presumably, to move people to a more SaaS-based environment and take away a lot of the stuff that they have in their basements already.
Well, a number of people around the world have heard me use a lot of different metaphors, but this particular one, when one is got, and I'm going to give you a sort of context. If you've got a small town with a crazy traffic flow problem, the answer isn't bulldoze down all the houses. The answer is build a bypass. And just take that metaphor forward to, the new trading world. TT has got the platform for today and the future. Expandable, no limitation on capacity, ability to grow, to add features and functionality. And what we have to do is just progressively add functionality, add features, supported by those subject matter experts that I will either recruit or we will acquire as part of acquisitions to go after this marketplace. So, I'm often bewildered, I think would be the word, at how people get frozen in the headlights of not being able to see how to solve a problem. Situation whereby somebody says you can't replace a system in a year. A year. You just need to break it down into component pieces. A little metaphor for you, I'm afraid, again, Everest. Nobody climbed Everest by looking at the top, because it's pretty frightening to think of what you got to do. You go base camp, base camp. So I think there's a psychological barrier sometimes for people to engage with change in a way they should do, where one should look at the opportunity to be freed up from the shackles of the past, to be able to be liberated to do what you want to do by using a new trading platform that's got extensibility and will grow with you.
Yes, that's a very interesting point altogether. And actually, you've got a comment here from Ron Carmichael, which is echoing exactly that point. He's saying momentum and speed to market is so important now. Great opportunities. And actually, I would agree with you. I mean, the overall bullishness about the exchange marketplace is quite substantial.
Incredible.
Even if you're looking at the large exchanges, the small exchanges, you look at the expanse of product that we've had across the board, quite incredible altogether to see what's been going on in terms of the whole business of what's there and what's around this marketplace at the moment. It seems to be incredible. And actually, you're echoing the words of our guest from last week in a very, very different area of the technology stack, which was discussing exactly the same issues all around. So we're looking at these opportunities. There's a huge number of opportunities in the product area. I think there's a huge number of opportunities in terms of products that aren't even in existence so far. I mean, actually trading products and even exchanges that are being grown and brought up. How much of a problem is that, though, for you as more and new exchanges are born?
Well, firstly, historically, TT has talked about its sell-side customers, its buy-side customers. one of the things that I've laid out clearly from my first days here, both publicly and privately, has been that we've got 3 customer bases. The other one is the exchange community. We are fully embracing all of the exchanges out there and in conversations about how we can each work together to grow their businesses. And I'm talking about some of the largest exchanges of the world. They recognize the role TT has got interconnecting the plethora, to go back to your point, of exchanges that historically have existed and then are being added to almost daily, one might say. Now, there is absolutely no doubt there is a commercial point here, and I will put it in very straightforward language to explain it. You know, we have global reach around the world. Somebody comes up with a new exchange idea, we're fully embracing that, you know, that we will work with them. But quite frankly, I'm not prepared to take an equity risk, inverted commas, I don't mean shares, bet on their success. That's not my role. That's their backers. So to get access to our global reach, the smart new emerging venues, and they are all coming to us and say, can we connect? And by the way, we're rational as well. Yeah, they will pay for access to our global connectivity because they want to be on the drop-down menu of venues that people can connect to. We've got thousands of people connecting every day to venues. Why wouldn't you want to join your have your venue connect to the TT ecosystem?
So you see it as being a model where you can ultimately extract a significant rent from the exchanges to pay for your gateway?
No, I can see us acting as a facilitator of their growth. So that it's not our role to take a decision and assess whether their investment case in their venue is right or wrong. Yeah, there's not enough time.
Okay, so, but you're still saying that you expect them to pay for you to connect to their market. Did I understand you correctly?
You used a particular word, rent, which has a meaning to an economist, and we're just saying that there has to be a balance between who's taking the risk on their success or not. We must have multiple requests weekly to connect to venues. We have absolutely no idea whether we might have an opinion, but we have no idea whether they succeed or fail. That's not what our role in the world should be. Frankly, and this goes back to the point you made earlier about the ease of integration of technology. With today's technologies, and take the crypto venues, most of them are fixed. It's almost plug and play. It's never quite as simple as that. So we're not talking about hundreds of thousands of dollars cost to connect, but there is a cost to connect. We've got opportunity cost, and we've got to be realistic. We're business people at heart, delivering a technology service.
Okay, I don't think we were disagreeing on that, but it's very interesting because certainly, obviously, one of the points is you do end up as being therefore both a gatekeeper and extracting a toll from the market, as it were, because they're paying you in order to connect. I think it's quite
ways
clear.
of describing it. I think we're the springboard for their success.
Okay, that's one way to look at it, certainly. It's interesting to see this comment from John T. I love to see companies with problem-solving opportunities, ambition. Couldn't agree more with you, John T. I think that's very true in much of the case. Now, Simon Huckle, he's trying to pin you down here, Keith, slightly more into the crypto space. What are your thoughts on crypto trading? Are you a fan? Do you own any Bitcoin? And if you have them, what are your thoughts on what happened at Luna? That might be a little bit too tradey for you, but have a go, Keith, if you're interested in answering.
I'm happy to give you an opinion. The starting point for this is TT is fully committed to participating in the emerging crypto world. As I said earlier, it will be by positioning itself at the epicenter connectivity. We will also be looking at partnerships and that we might form to add other value to those emerging crypto marketplaces. The answer to the question, do I have any Bitcoin? No, I don't. Does my son have some Bitcoin? Well, he did. I'm not sure whether he's got at the moment. you need to ask him. I need to ask him. But no, I don't have any Bitcoin. I think it's a very important topic, this, and one has to, although I'm a free marketeer and I'm totally free markets and regulation should be minimalistic, I have to say that in an unregulated world, which crypto intrinsically is, because everybody seems to be sidestepping it, there are massive risks, and I'm not anybody's financial advisor. I just think people need to understand the risks one is taking when one takes a position on any particular venue or coin. There are some great crypto venues out there, and there will be emerging successes. What's happened at Luna is tragic, and hindsight is wonderful, but should have been avoidable.
Excellent answer. Thank you very much. Thank you, Simon, for the question as well. That's most useful and most interesting altogether. And so we actually then have a follow-up with a question from John T. Do you feel, Keith, that companies are taking more risks to succeed now than before? And has that been impacted by current economic and stock market conditions?
Well, it's to say the least, a very, very interesting question, and time alters things very, very quickly in terms of people's sort of attitude to risk. If one looks at risk from a macro point of view across the globe, we have the highest political risk I can remember. And I'm rapidly going back through too many decades of my life, but I think I'm a post-war person. But I think the political risk is the highest ever been. The current consequences of what has happened between COVID and its damage to and the political isolation strategies and the creation of inflation has made the business environment incredibly more complicated to manage in. So it would not surprise me if a number of organizations lowered their risk appetite as a result of some of the macro trends. Now, not everybody, because there's also for those people out there who are historians on economic cycles, some of the best investment successes have been to invest in markets in downturns. So if one places specific bets in specific areas, and we're placing a specific bet in a specific area, it's called trades execution services, there is risk, but it's a risk worth taking. It's one whereby whether the political risks I talked about or the economic risks I talk about, those will both increase the amount of trading that's going on by the community that is broking this world. So I think you have to be very, very specific about where one takes risk at this moment.
Interesting insight. You have to be very specific about where you're going to take risk at this moment. Of course, one of the other issues that often happens when you've had a huge bull market bubble and it's exploded is you then get an explosion of regulation. Although, on the other hand, as we've now had several years of a couple of years, certainly of the Brezhnev administration in Washington, D.C., it's difficult to know that they ever stopped trying to add regulation. Would full regulation, great question, Ian Miller, would full regulation in the crypto market be the way forward?
For 2 or 3 decades, originally in the technology world, telecoms world that I was sort of indirectly connected to, I think it's about appropriate regulation. And I know that can be a soft word. Full regulation, no. Appropriate regulation. First of all, our friends in the US, and even something I was being told recently, even in the UK, the FCA is questioning whether the right place to regulate crypto. Somebody take a decision. It doesn't matter who regulates it, but takes a view as to what is the minimum standards of compliance that needs to be in place in order for the marketplace to be a natural marketplace rather than a marketplace which is driven by hype as opposed to substance and what us traditionalists would call cash flow.
Very measured, very sensible answer. Now, you mention appropriate regulation. Let me ask this. There are discussions. I'm coming to you today from Valletta in Malta, where they actually already have a body that regulates technology. Is technology regulation going to be appropriate, do you think, Keith?
Well, the technology companies are indirectly regulated today. Pretty well all of the financial services organizations, all the major players have requirements around outsourcing and the proactive management of any key service component within their domains. And for example, just an area, algos. Algos need to comply with all the MiFID regulations here in Europe, and we've got programs to ensure that they do comply. So it's actually wrong to think that tech companies aren't regulated. The question is, should they be regulated directly? Yeah, maybe. But I think we're all cognizant of the importance of validation of our operating processes and practices. It's a pretty standard requirement. And even KRM22, in its second year of life, third year of life, we got SOC 2 accreditation. Now, that may be beyond most of people's interest, but it's an independent audit, not of the financial statements, but of the operating processes and the cybersecurity processes that ensure the company is safe to be dealt with, and very important in the capital markets. So we are indirectly regulated already. And so as a result of that, I think everybody is acting pretty responsibly from the tech supply side.
It's a very interesting point. And yes, you bring up SOC 2 and everything else to do with, well, life in a world of sharding and other information security protocols. Yeah. And it is very, very key. And indeed, you are being regulated in that way to a certain degree. I just couldn't resist the idea of asking you that as we're going along. So tell me about how you're reacting to changes that are going on in the market generally. Is it having an impact on how you're viewing technology for the future, or indeed where you're looking at your strategy with, say, existing markets as opposed to the new ones that you've been outlining already?
Well, one of the challenges when I look at whether I go to partner with or acquire companies in other asset classes, for example, does one acquire an established organization with older technology by the nature it's established, that's evolving, that's not SaaS, but has got a good customer base? Or do we handpick some emerging young SaaS businesses that have not yet fulfilled their full potential, are in the foothills of their opportunity? And so when I look across the market from a point of view of technology, I've had in recent years a very, very active radar on emerging innovative technologies. When it comes to the marketplace itself, I think there are a number of historic last decade or so trends which I think we're going to continue to see. FCMs in the derivative space consolidating. exchanges had in the, whatever it was, do you remember it, 2000, 2010, great appetite to acquire. Wouldn't surprise me if that re-emerged. But that's, it would be interesting. And I think the other interesting one is the balance of influence, and you might put in brackets power, between the sell side and the buy side. I think they are interesting areas to keep an eye on, because there's always a natural of an ebb and a flow on each of these, but they're all very interesting sort of aspects of the dynamic of what is a very vibrant capital markets infrastructure.
What about the dynamic of vendors? I mean, you're almost an oligopolistic player, one could say, in the overall business of providing the infrastructure to a lot of derivatives exchanges. Do you think there's a dynamic that's going to change there, or is that going to tend towards being several large players into perhaps only one or two players?
Well, I think there is a very significant challenge for any startup in capital markets. It's not impossible, and you're well aware there's a number of banks have contributed to funds, and there's groups that try and nurture early stage innovations on behalf of the capital market institutions. But I think it is very hard compared to 20 years ago to start up and progress because of, ironically, the regulation side you talked about earlier. The ability to have SOC 2 accreditation before you can really be onboarded by tier 1, tier 2 banks, for example. So I think it is quite challenging for firms, and there has been on the capital markets technology side over the last 20 years consistent consolidation, whether it was the old SunGard in its day, then now FIS. SunGard, now FIS Capital Markets in our domain. Whether it's Broadridge, whether it's buying activity, or whether it's ion trading, and the last 20 years of consuming and acquiring assets. So I think that trend of moving to a few key platforms out there, and I'm going to stress the word platforms out there, is going to be there for the future. My intention of Trading Technologies is to be able to provide the ability to partner, the ability to be an umbrella, the ability to be a greenhouse, somewhere somebody could grow within the TT ecosystem to help their businesses emerge for the future. Because I think it is an important, and this is a big topic, that we do manage to keep innovation going. And not just concentrate on the big customers.
Very interesting. It's vitally important that we keep innovation going. So therefore, let's go to our last question of the day. It's the question we always ask every guest. Where do you see the capital market revolution going next, Keith?
Well, it's clear that the definition of next is really critical. And I just want to go not in the next 5 years, but the next decade. What I see in the capital markets is an inequality in terms of the customers of the capital markets, where scale matters, and that what I would call the commoditization of the capital markets capabilities and infrastructure to trade any asset is going to be the big mega trend over the next decade, and it could be the next 2 decades, where what we've seen to a degree in the equity marketplace is where the cost of trading equities has come down so dramatically, the cost of clearing is going to happen across the whole plethora. And this won't just be a marketplace for the large organizations, the big funds. It will be a marketplace for all consumers to participate in at some level on, frankly, a rational economic cost. So I think the future is that the democratization of them, the commoditization of trading to make it cost effective. And the reason I say that is because technology can facilitate that. Technology can lower the cost. Think about Microsoft and what it's done to your features and functions on your PCs, and obviously there's others as well. Actually brought what were features and functions only available for the larger enterprises 20 years ago are now available to all of us, Google included, providing these capabilities. So the commoditization, the democratization of capital markets to really make it a revolution for everybody, not just for a few.
Technology democratization, the opportunity, and indeed, as you say, the functions that have been brought to us that were available only to a select few 20 years ago by, of course, people like the visionary Bill Gates, the man who famously said that 640K ought to be enough on every computer for everybody. Fascinating to talk to you this evening, Keith, Todd. Really, really appreciate your time. It's been superb discussing delivering SaaS software through TT. We wish you all the very, very best in the future. Next week, we're going to have Arthur Fischer, the former CEO of the Börse Berlin. He's going to be talking bourses as businesses, good or bad. You can join us at the same time next week. It only remains for me to say thank you very, very much to all our magnificent commenters this evening. Simon Huckle, Ian Miller, Marcus Ward, James Davis, Ron Carmichael and John T. Thank you for your comments. Thank you for your questions, one and all. And indeed, I'll leave you with one of the many great comments made this evening by our guest, Keith Todd. One needs to be cognizant. One needs to be cognizant of the different styles of trading, whether it's in innovation, however you look at this. Ladies and gentlemen, SaaS software is a factor of not just our present in financial markets, but very much our future. My name is Patrick L. Young. Thank you for watching this latest epic IPO-VID. Looking forward to seeing you next week. And of course, meanwhile, the discussion about the business of SaaS, trading technologies, and the business of bourses continues daily in the Exchange Invest newsletter. My name is Patrick L. Young. Thank you very much, and good luck in blockchain, life, and markets.